What's going on, everyone? I'm Encore. This is Tomorrow Never Comes. And today is a very big day in terms of inflation rates. So the Consumer Price Index, the CPI, was released for the month of June. And we're going to go over some of the stuff that, the numbers that came out, what it actually means, the real numbers, or at least more real numbers versus what's actually been announced. And how kind of things packaged together. And here's the funny thing out of all of this is that I am not an economics guy. I have always been a science guy. But here's the beauty of being in Bitcoin and from Bitcoin into crypto is that it actually teaches you and makes you interested in economics and finance. And that's something that's hardly ever talked about. Everyone's just talking about price. But once you're in this game or in this space, you start to pay attention to overall economics and asset classes. And there's a whole bunch of terminology in there, just like science field or any other field, that is foreign to anyone outside of it. And so once you get into this space, it actually teaches you things that school never did, at least for me. And that's economics, it's finance, and just investing in general. So with having said that, let's just jump right into the material. All right, so what came out today? So what was expected was actually 8.8%. I want you guys to keep that in mind. Okay. So the last time these numbers came out, inflation, the inflation rate was 8.6%. And so they had actually predicted that the next set of numbers, which were released recently, would be 8.8. And lo and behold, inflation was actually more than that, which was 9.1%. Okay. So even more than expected as consumer pressures intensify. Now, here's the funny thing. I'm going to direct you guys down a little bit lower where it says key points. All right. And this CPI does not account for food and energy. All right. So think about that for a second. The majority of what we spend our money on, at least from a fixed perspective, month to month, would be food and energy. And those are the two numbers that are not represented here in the CPI. Those two, which I'm going to show in the next slide here, food and energy, have increased quite a bit, okay, significantly. And so for that not to be included into the general CPI, it actually hides how bad things actually are, okay? And so maybe backtrack a little bit. So why is inflation even important? So basically, the higher the percentage of the inflation, it just means that you've lost that amount of purchasing power. Okay, so what $1 was before is, now 10% decrease from what it was, okay, or 9.1%. Well, what you'll see is even more so going forward. And so it's kind of interesting to know what inflation is, why these numbers are so important. Is it a high number that's better? Is a low number better? The higher it goes, the less purchasing power you have. So let's just keep that in mind, all right? So here's a great one, and this was a tweet that I saw, which actually reported the real price increases over the last year. Okay, so like I said, food and energy here were not included in the CPI, and you guys can see just electricity is 13%, almost 14%. Food at home is 12%. I mean, look at fuel; it's almost 100%. Gasoline 60%. Okay, and so here's new cars 11%. Transportation is almost 9%. These are U.S. figures, by the way. Food away from home is almost 8%. Used cars 7%. Shelter is almost 6%, and apparel is 5%. So sometimes when you see the CPI index, at least for me, it doesn't really mean much when all you see is one number. Like, how does that break down? So this was fascinating to see how each and every line item actually increased over the last year. So pretty heavy numbers here. All right. I mean, we all know fuel has gone through the roof. So that's no surprise. But when you look at electricity, when you look at food at home, things like that, makes you even see even more of how we've been impacted by all of this money printing that's been happening. Okay. The next one here was actually very interesting that I saw. Okay. We'll get into the details here, but basically what they're doing is they are including the cost of housing. Okay. And how housing has increased. And so instead of it being 9.1% over here, if you include the cost of housing, we're actually up almost 13%. Okay, so again, that 9.1%, as high as it is, is actually misleading because it's much lower than what the actual reality is. So very interesting here. Okay, so not a good thing. All right, and now on top of that, let's make myself smaller here. So on top of that, we have, again, these are U.S. figures here. Wage and salary earner, wage, how much you've earned, your earning potential. Okay, actually, you know what? I'm gonna correct that because that whole sentence was garbage. So this is exactly how much the earnings have been for people who are working, the wage earners, right? And they've actually taken a 3.6% haircut over this time period. So it's a reduction in their actual wages has been 3.6%. All right, so we've got inflation up at 9%. Your wages are minus 3.6%. How is it that you're able to survive with what you're earning is far under what actual the cost of these goods and services are? It's impossible to do that for the average family. Okay, now you may be thinking, well, look, you give me a lot of data for the U.S. and maybe it's just a U.S. thing. Okay, and most people understand that the U.S. kind of drives most economic situation. So you'll understand that obviously this is not just a US specific issue, but here's something that really highlights that. Okay, and here are all the countries' inflation rate over 15%. Okay, I mean Lebanon's at 211%, Sudan's almost 200%, Zimbabwe, Venezuela, Syria, Turkey's up 79% almost. All right, I made a video about Sri Lanka before. It's almost 55%. So you guys can see there's all kinds of countries in here right now that have over 15%. Okay, and so again, just remember that if we were to do the actual figures, we may be seeing the US numbers actually 15% or plus or over, right? But the way they calculate it and the way they massage the numbers, it's not what it seems. Okay, and which is crazy because we all think 9% is bad. I mean, it hasn't been this. The inflation has not been this bad since, I believe, 1971. So quite some time ago. All right. And here's the thing that I want to get to. So all this doom and gloom, right? Everything's happening here. And what is Bitcoin doing? I mean, stocks are crashing, right? And the housing market is taking a hit now. That has a little bit of a lag to it. So it'll take some time for we really get to see how badly the real estate market has been hit and will be hit going forward. But stock markets, you can see now. I mean, as soon as these inflation rates come out, everything just tanks lower and lower. But having said all of that, what is Bitcoin doing? All right, because that usually tends to follow with the stock market. Well, let's see what we're doing here. So let's get out of this and I'll move over here. So we're sitting here at 19,700. So it's actually held up pretty well, considering it's been around in that area even before these numbers were released. Okay, now everyone's clamoring for 13,000 Bitcoin, 14,000, 15,000, maybe lower. Everyone's saying that. And can it happen? Yeah, absolutely. Absolutely, it can happen. Okay, I wouldn't put anything back. I actually thought it would never hit 20,000 again. So I'm one of many who are wrong, but I'm one of the few who are okay saying that. Everyone's got a moving goalpost when it comes to their predictions, and no one really knows what's going to happen. All right, but why is all of this important? Is the fact that your money, your currency, whatever it may be, for me Canadian dollars, for you US dollars or the pound or whatever it is losing value. That we kind of know. You know, when you hear your parents or your grandparents talk about, hey, when I was buying bread, it was 10 cents. Now bread is like over $3 or whatever it may be. But this is different. The amount of money printing that's happened over the last year and a half. Okay, I think there's been 7 trillion printed across the globe in the last year and a half. That is significant, and there are massive reproductions to that. And so no one's really, well, especially the leadership will always just kind of say it's transitory. It doesn't really bother you. It's not going to make an effect. It's, here today, gone tomorrow. That's not the case. So things seem to be heading, or already in, a pretty dire situation, but seem to be getting worse. And we kind of have to open our eyes to that, of what the centralized systems are doing, how the system is broken and it's only favoring those at the very top, or those at least pulling the strings. They know in advance, they say certain things to the media, but they all know what's happening. They're not stupid. Okay, they understand and they manipulate it. So where Bitcoin and where crypto comes in is that these are assets that one Bitcoin is one Bitcoin, regardless of which country you go into or what time period. It's actually an appreciating asset, even though it has fallen, significantly from its all-time highs. You got to have the long-term perspective. All right. And there was a great quote that I saw Grant Cardone have. You shouldn't be looking for get-rich-quick schemes. You should be looking for get-rich-for-sure schemes. Okay. Now, that's a mouthful. What does that mean? Is that everyone came into crypto, or majority of people came into crypto, and even a little bit myself. You look at what gains can be made in a relatively small amount of time. But that is the incorrect way of looking at it. You're looking at price point only. And when you look at fundamentals, you look at technology, you understand that over the long period, while there may be some pretty bad bumps in the road like we're having now, long term, the chances of Bitcoin and other assets within crypto winning outright are pretty high. All right. So you got to look at the long term play. I mean, Amazon itself was at $2 a share at one point. Over that 10, 12-year span, unless you forgot about it, you probably wouldn't have stayed through the rocky road, right? The ups and downs for Amazon, and look where it is now compared to where it was then. So this is a technology play. Do your own research. Look at the fundamentals and have a long-term perspective, and dollar cost average where you can. That's it. Invest however much you can and dollar cost average, and keep your sanity. All right. That's really the main thing here. So guys, I hope you found some value in this. There's some big things happening in the world today with social media and how digitized we are. There's so much information. Sometimes it's difficult to weed through all of it. All right. So you have to have an information diet, but keep your eyes open, question certain things, question everything really, and do your own research. So just remember, tomorrow never comes. Invest in yourself today, take action, and I'll see you guys in the next video.